Today I want to look at the weekly charts using TrendSpider, and I want to show you that there's some very important information coming up on IWM in the small caps that could be following the big tech sector and the rally that we just saw in the triple Qs. So if you want to set up your TrendSpider chart to look just like mine, click on the link in the description. That'll have a tutorial video that shows you exactly how to set up your charts. And TrendSpider is also doing a promotion for the 4th of July. And if you want to save up to 50% on a TrendSpider subscription, just click on the link below and you can claim that discount. Alright, so first we're looking at a weekly chart of the NASDAQ 100 triple Qs and just doing a bear market Fibonacci retracement of the entire bear market of last year. We can see that we have now retraced past a 61.8% retracement, and we have officially rejected from the 76% retracement. So technically speaking, if you see a retracement this deep, you are usually out of the old trend and into a new trend. So we are looking at the triple Qs weekly chart, expecting this bull trend to continue. Now, obviously, the critical resistance was that rejection at 372, and that's going to be the critical resistance we need to break. And once we break that resistance, we should technically retest the previous all-time highs. So whether or not that's going to happen right now or it's coming later in the year, that is to be determined. But that is the expectation if price action starts closing above that level. Now let's throw on the indicators, because there's a very important thing that happened on the triple Qs weekly chart. And we talked about this going all the way back to earlier this year, that we were getting this weekly squeeze on the Bollinger Band KC squeeze indicator that was telling us that a lot of energy was about to be released to the upside. If you go back to March and April, that's when we were squeezing, and then we had the official breakout. And after that bull flag breakout above 321, the triple Qs have been on an absolute face ripper. Now looking at the chart back then, I told you that the RSI on the weekly chart was above 50. The MACD was positive and trying to cross back above 0. And once that squeeze fired to the upside and we broke through that resistance, we were likely going to run away. And that is exactly what happened. That is what's so important about having these technical indicators, because if you're following price action and you have this additional information, you are going to have a significant advantage in the average trader who does not know how to read the technical analysis. So with the bullish price action and the bullish indicators, this was a very low risk trade to stay bullish. And so far that has paid off very well with very little risk around that support level. Now looking at the triple Qs, we can see they have led the way higher. And the next sector I want to look at is the S&P 500. And we can see that this index is just now starting to fire off the weekly squeeze. And we are 3 weeks within it with a positive MACD, and the RSI is still well above 50. Now with SPY, that was the breakout above the 61.8% retracement at SPY 430. And that is the critical support level we need to hold above while we have this weekly squeeze and positive momentum to push higher towards the next target, which is between 448 and 450. Again, if we break through all of these resistance levels, then we should retest the previous all-time highs. So these are not levels you want to ignore, especially with all of the bullish technicals and the strong momentum to the upside. So I just showed you how the triple Qs led the way higher and how SPY is now following. And the next thing I want to do is I want to jump over to the small caps, which is the IWM ETF. And if we simply just look at the price action, this is still a very bearish looking chart out of the bear market. It is really just consolidating, and this is starting to build out what looks like a wedge. If you just draw this out, we have lower highs. And if you draw the bottom of the wedge, we have higher lows. So we are really just consolidating and wedging in and building up energy. And if we throw on the technical indicators, we can see that is exactly what we see down here with the BBKC squeeze. We're going from negative momentum into neutral momentum while we're squeezing. The MACD is trying to cross back above 0 with positive momentum, and the RSI just bounced off the weekly support level at 50, so we still have positive momentum. So if you combine the weekly wedge with the same exact technical indicators that I just showed you on SPY and the triple Qs before their bull run, you can see why it looks possible that the small caps IWM ETF is about to go on another face-ripping rally. That doesn't guarantee it will, but if you simply just look at the price action, we did bounce off of the weekly 20 simple moving average, and we had a very bullish week. So if we start to break out of this wedge to the upside and we start to clear that resistance between 188 and 190, we could see all of these indicators release that positive momentum, and we can easily start running higher towards 213 and then 225, which is exactly where SPY and the triple Q squeezed to when they had their breakout. So you can see very easily how these technical indicators give you an advantage when you're following price action, and you have technical indicators giving you positive confirmation that you're seeing what you're supposed to see on the chart and the technicals are aligning. You are going to have much better risk reward ratios and much better success in your trading. So the number one thing I want you to pay attention to on IWM is based on the fact that SPY and the triple Qs had the same exact movements with the same exact technicals. there's a very good chance the small caps are just lagging behind and they are about to be the next major bull rally. This is all based on everything I just showed you from SPY and the triple Qs and how IWM has the same exact pattern and the same exact technical setup. When you can identify what's leading and what's lagging, you can take advantage of multiple different trades that are all moving in the same direction, and you can move your profits from one successful trade into the next successful trade. So as I said in the introduction, how to set up your charts to look just like mine is going to be in the link in the description, and you can claim TrendSpider's July 4th discount for up to 50% off their subscription plans by clicking on my link in the description and claiming that discount. Also, if you're interested in more of my analysis and my trade ideas, I have my own trade alert service called Bank Trade Alerts, and I have the Stocks Channel Trading Discord community, and you can find out more about either of those services or learn how to subscribe by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.